moderator, inviting the moderator on stage. So he is the Chairman, Ethics and Disciplinary Committee, Nigeria Computer Society. He is Mr. Alabi Olusegun Sunday, FNCS. A round of applause for him as he comes on stage. Please, let's encourage them. This is our last session for the day, by the way. We're not keeping you as long as yesterday. All right, so we also have the Head of Operations and Technology Transformation, InterSwitch, Ife Adejumo. Please, a round of applause for him. Thank you so much. We also have the Managing Director of Founder Institute. We have Ajuma Ataguba. A round of applause, please. Round of applause for her. Okay, so we also have the founding partner of Sabua Capital, and that is Thraya Ahmed. Round of applause for her as she joins me on stage. And of course, we have the branch manager of Sycamore Abuja. We have Ewere Idu. A round of applause for her. All right, we have Chisom Wilson Dickey. A round of applause, please, as she joins the stage. Okay, all right. I think this is a very gender-balanced panel. The last one, I didn't see any women there. And you know, we started our day talking about, you know, women. So I like that we're ending it on a very lovely note. Thank you, ladies, for joining this panel. Thank you, sirs. So, you know, it's supposed to be balanced. So thank you. I also wanted to announce, in case you need to, in case you want to join the co-creation session on the main stage, that's happening now, so you can head there. But please, if you're here, enjoy the session. So I'm going to hand over to the moderator. Thank you so much. Please, a round of applause for them before they start. Thank you so much.
All right. Thank you very much, the MC. And let me start by appreciating the organizers of this event too for giving us the opportunity. Good evening, everyone. And we will try as much as possible to make this snappy, because we know that all of us will have been tired now and want to go home. So quickly, welcome the panelists. You are all looking good. Yeah. So we quickly go into our questions. I will have said, okay, maybe we should introduce ourselves and tell what we do. Let's just start from here, please.
Okay. All right. Good evening, everyone. I can say that now. My name is Ife Adejumo. I'm the divisional head for operations and technology transformation at InterSwitch. What this simply means is I own a number of strategies, execute them, and drive transformation across InterSwitch. So IT, operations, digital, AI, and quite a number. All right, thank you.
All right, thank you. You're welcome, sir. Next, please.
Okay, so good afternoon, everyone. My name is Ajuma Ataguba, and I'm the Managing Director of Founder Institute. Founder Institute is the world's largest pre-seed accelerator. Our headquarters is in Silicon Valley. We have helped over 8,000 startups, tech startups, build capacity around the world, and they have raised funding in the region of $1.9 billion, and they have a portfolio value of about $30 billion. I'm happy to run the in-country activities within Nigeria in Abuja. Thank you.
All right, welcome, ma'am.
Hello, good evening, ladies and gentlemen. My name is Suraya Ahmed. I'm a managing partner at Sabu Capital. We're an investment management company focused on investing in secondary cities and high-growth SMEs. So secondary cities or secondary regions are regions that primarily do not get investment. So in Nigeria, we invest outside of Lagos. We also invest in other Francophone African countries, including Cote d'Ivoire and Senegal. Thank you.
All right, you're welcome.
Hi, good evening, everyone. My name is Ewere Idu. I work as a branch manager for Sycamore here in Abuja. Sycamore is a fintech that democratizes access to credit for SMEs, as well as building wealth and wealth solutions for individuals and businesses where they're able to grow their wealth. And majorly, one of our mission is to make Africans more prosperous.
Okay, thank you. You're welcome.
Hi everyone, my name is Choma Wilson Dickey. I like to say that I've had two lives. So in my past life, I was a consultant at KPMG, advising clients on all things regulatory compliance. And right now, I'm building a regulatory technology startup. So I'm productizing what I used to do as a consultant. And essentially, we're trying to ensure that your fintechs, your health tech, like all startups and companies build or run their businesses within the confines of the law. Thank you.
Okay, thank you very much. All right, let me start with Ife Adejumo. Yeah, before ladies start to intimidate us, let's start from men. All right. Okay. From your perspective, leading operations and tech, a major fintech, what operational signals attract, deter institutional investors? You get that?
Yes. Okay. So let's start with attract. Robust, scalable infrastructure with very little service disruption. Investors want to see data, and they want to know that you're questioning your data as well. You're asking the whys, and then you have the answers to when your data is showing you trends that are going in an area that is not so good. Or in case it's excellent, they just want to show that you have the excellent breadth of data. But they want to know that your infrastructure is robust enough to scale, not just across the regions, but across countries, across continents. They want to know how big you can go. So you provide them as much of that sort of data as is possible. So that's key. Another is seeing if you've been able to build in cybersecurity, governance, risk compliance from the beginning. So you're showing that you are compliant to all the necessary regulations. You're showing that you have your governance set up. You have maybe boards, or you have advisors, or you have proper risk profiles that are interrogating your systems to ensure that you are as secure as is possible for your customers. I think that's quite key in the space as well.
Yeah. What about those that deter them?
Okay. So once you don't have your core processes or your stack or your major infrastructure, you don't have a lot of documentation around that.
Yeah.
That's a big red flag.
Yeah.
That means a lot of knowledge is sitting within people's heads, and with our rates of attrition, you can be in deep water if you don't have a lot of these that are locked down very quickly. Another sign is around automation as well. We have a lot of manual processes. If you have a lot of siloed work that's ongoing within your organization, it's not a very good sign, because it means that as your business grows, as you try to scale and get bigger and bigger, your operations are going to get larger, more manual, and they're going to, at some point, start to have a negative effect on your business.
Okay. Yeah, that's a good one. Yeah, so let me go to Ajuma at Taguba, right?
Yeah.
Okay. As someone who mentors early stage founders, that's the Founders Institute. Yeah. What common blind spots do Nigerians entrepreneurs have when pitching to investors?
Okay, thank you. That's a very interesting question. So what we often see, especially when founders come across to us at the Institute, is overemphasis on the idea. A lot of them go on to building a product quickly. Meanwhile, they don't have a clear business model. And investors would like to know that if you have an idea, you have a strategy about how to sell, go to market, and how that, when they invest, it returns to them with a profit. And so there's that lack of clarity on market size and even the unit economics. And then a lot of founders are besotted, just by being a founder who has this idea. And so team building, then they're not great on team building. And so that narrative about the team is weak. And investors want to see that you have a team, a strong team, that can build that business and into a sustainable business at the end of the day. And then there's also the lack of understanding of the different kinds of investors. The investors have different, I would say, thesis or interests or the types of businesses that they are interested in investing in. And we see that founders are not doing enough research. They think that once you're an angel investor or a VC, they ought to just come and pitch their idea, and so you begin to hear from founders, we don't have capital, investors are not interested, but because, you're not pitching to the right investors. So those are just some of the common blind spots, that we see in the immediate with Nigerian entrepreneurs. And then there's the lack of financial transparency. They're not keeping their books, or they don't feel free to disclose, the numbers and the figures.
Yeah.
Thank you.
Okay, thank you very much for that. Okay, so that should lead me to Turaya Ahmed, okay, who is a founding partner of Sabo Group Capital. Now, what sectors are most exciting to Sabo Capital right now, and what kind of startups are you actively looking for?
Thank you very much. I think I would like to differentiate between startups and SMEs, because I think that's sort of a gray area and most people don't understand the difference. So when it comes to startups, which is where we consider investing equity, we look for deeply innovative and highly technical companies. So it's not just about building the next fintech or the next marketplace or the next e-commerce platform. Is really asking those companies, what is your technology edge? What is your moat, right? Are you building an LLM? Are you building something with large training data, for example, that would be difficult for other people to replicate? Are you building a product in the healthcare space that is focused on biotechnology, gene editing? Those type of deeply technical products that have technology edge, we would definitely consider for equity. Now, a lot of other sectors, because we operate in secondary regions, so outside of Lagos, most of the companies we would find are traditional businesses. They could have high growth potential, or they might be growing massively either as a result of exporting out of a country or servicing a large market base. So for us, those are the traditional sectors. So agriculture, agro-processing, but of course with a lens on regional expansion. So is your agricultural SME or processing company running efficiently in such a way that you're servicing a large customer base, or you have the potential to serve a large customer base in Nigeria? You can leverage the Africa Free Trade Agreement to export across the continent. Do you have forex income? So those we would look at from an equity investment point of view as far as high growth SMEs are concerned. We also consider companies in light manufacturing, climate adaptation, so companies that are in the renewable energy space or creating climate solutions. We're very big on adaptive financing, and what that means is we want to give companies the type of funding that they require. And I'll bank on what Ms. Ajima said just now. It's not every company that can absorb equity. For you to be able to absorb equity, you need to give investors an exit via capital increase, share capital increase. And most companies are unable to do that either because the industries are not that attractive, or there is really no potential for them to be acquired or to IPO or something like that. So we consider giving other types of financing, including equipment leasing, revenue-based financing, and working capital or debt. So really sort of think about where you stand as a company, as a and a founder, and what type of financing you should be looking to access. Thank you.
Okay, thank you very much. I hope the founders here and the startup CEOs, you heard what the areas that they are looking at for investment. So it's an opportunity to hold a trial when we live here to see what you can do with them. Now, I'll go to Ewere Edu. Yeah, this about understanding investors' priority. From your experience in wealth management and SME financing, what are the top 3 things investors look for before committing capital to a Nigerian startup or small business today?
Thank you. The first thing would be a strong financial health. Startups should be able to show high growth potential and strong earning profile that can scale. That is one thing investors would look out for. Second thing is governance and transparency. You don't want to run a startup like you're running your personal life. We have founders who don't even have things like a payroll management system in place. They don't have a way to track their expense. So those things need to be in place. You need to be able to show that level of financial discipline to potential investors. And of course, the team. A formidable team, a team that can build solutions, a team that is resilient, a team that is competent, because when the chips are down, you need the team to be able to weather the storm. So investors generally look at these 3 things as a way of minimizing risk and also maximizing their returns.
Yeah, okay, thank you for that. Then I'll go to last person as Choma Wilson. Okay, all right. Okay, the trust equation. Now, how can SMEs and startups build the kind of financial discipline and reporting culture that earns investor trust? Ellie.
So that's an interesting question, and I always say to founders, when I consult for them, that investors can put a price on risk, but one thing they can't put a price on is uncertainty. And in our country, Nigeria, the greatest driver of uncertainty is, like regulatory compliance. So you want to, for example, if you're operating in fintech, you want to show investors that even before you've thought about your idea, you've done like a thorough mapping of, all your regulators. So people always say to me, it's just the Central Bank of Nigeria, and I'm like, no, you have almost 10 regulators, knocking on your doorsteps day to day. So you have the Securities and Exchange Commission, you have the NIDA, you have data protection, because you're dealing with people's monies, so you have to obviously show how you're protecting their data. And I know there's been a lot of conversations around data protection. So I think that's one way to show trust, when you're able to prove to investors that we have here that you've thought about compliance and you've built it into your product roadmap. I know that most founders think of compliance as an afterthought, so it's like something that comes when the regulators come knocking. But proving to investors that you've set your boundaries, you've thought about the frameworks and the guardrails for your products, I think that shows that, okay, this person knows what he's talking about. And then also proving to investors that when those regulators come, the monies they've invested in your business isn't going to fines and yes. So that's one way to go about trust.
Okay, that's fine. Thank you. I can see that our time is fast running. So what I'll do now is I'll just combine 2 questions because I don't think we can go more than 1 round again. So, Ife, how should founders position their technology roadmap to align with long-term investor confidence? That's one. Then the other one is, what are the biggest mistakes you see startups make when scaling tech operations after receiving investment?
Okay. So for the first one, okay, so how do we position our tech roadmap?
Yes.
For the first, I'll say show your scalability plans, especially when technology is concerned. Tech is expensive. We need to be able to show what our tech stack looks like at each point of our growth stage. That part is very critical for us. I'll also use that to lead into the what not to do at the point where you also receive revenue, or sorry, rather receive funding, which is don't over-engineer past your demand. So your customers are expecting X, 1, 2, 3 features, and suddenly your tech stack is able to send half the military to the moon. You don't need that level of tech for the level of customers that you have at that point. So you need to not over-engineer your systems. You also need to watch your burn rate very critically. So I think that's quite key. In the interest of time, should I stop there or do I keep going?
Yeah.
I can keep going. Awesome. All right. Okay, so the other part is to align your roadmap with your customers' expectations as well. But beyond that, sorry, just give me a moment. What else do I want to do? Okay, I want to introduce a different concept. All right, I'm going a bit off script here, but I think it's something that might be of benefit to young tech startups. And it's around improving your operational efficiency quite quickly and being able to do it in such a way that it shows value to anybody that's looking inwards into your company. And it's this very simple tech hack. While you're looking for tech talent to meet specific needs, let's say you're trying to hire a DevOps, you're trying to hire a software engineer, you're trying to hire somebody with data, and you're looking for the skills that would need to grow with your company, you always need to consider some level of automation or engineering skill in almost every single role you have in your organization, right? So when you're hiring your data engineers, your data analysts, do they have RPA skills, robotic process automation? When you're hiring your DevOps or your infrastructure guys, are they able to automate the pain away? Those little come and restart your servers on an automated schedule, come and do your patching, those little governance and risk type things that investors will look out for and say, okay, you're not quite compliant, your company is, or your infrastructure is a bit worrisome to look at. Are they able to automate all those things away? Those are the skills you need to be looking for in all the hires that you're bringing into your organization. All right.
Okay, thank you so much for that. Then Ajima, okay. How can accelerators like Founder Institute help de-risk startups from an investor's point of view? Then the last one is what are red flags investors often spot in cap tables or founder-investor dynamics during seed rounds?
Okay, so our program is an investment readiness program. And how do we de-risk founders? So we start by, first of all, giving the founders, that's when we're about to admit into the cohort, into, what we call an entrepreneur DNA test. And it's a psychometric test because we're just trying to find out if that founder has entrepreneurial traits, because not everyone is wired for entrepreneurship. So that's the first point that we start. And when I say investment readiness, we're just literally trying to de-risk the startup, so that they are attractive to investors. And then our program is curriculum-based. And that curriculum is set up or designed in such a way that it will take the startup idea from idea stage to validation and then traction, because investors would like to see traction. And again, investors invest in the person or the founder. And so it's very, very important that whilst our founder is going through this process, it's like, I would say, it's like a behavioral screen, that founder is going to pass through at the end of the day. Because we also have mentors who are CEO mentors that will be coaching them and, guiding them on business development, on how to build the business properly. But in all of that, we want to see that founder who is resilient. We want to see that founder who is coachable, who is teachable, so that when investors put their money behind that business, if there are disruptions in the environment, for instance, that founder is able to quickly pivot and iterate. And so our program helps to, mold, or will I say package the founder in such a way that the risk of investing is reduced to, reduced minimally. We're not saying 100% success, but then there's a way businesses are built, and it is being taught. And so when you go through that process, you learn how to build your business. Through the program in Founder Institute, we also help you set up your governance structure properly. We help you in identifying your co-founders. We help you with the agreements. We help you with the legal process, how to incorporate properly, how to incorporate your business properly, and, all of that kind of support. And then the curriculum also offers, you must meet some certain milestones for that business to, meet the benchmarks or metrics of an investment-ready business. And so week after week after week, there are milestones you must accomplish. And we have like 2 major checkpoints. One is called the mentor idea review stage. After the first 5 weeks, we test to see whether your idea has been validated. And after another 5 weeks again, close to the end of the program, by the time when you have an MVP, when the startup has an MVP, we also have another session called the Investor Progress Review session. By the time a founder is graduating out of the Founder Institute, his idea is clear. It's no longer vague. The KPIs are all clear. It's no longer vague. And the investor has confidence that indeed this idea, this startup has been vetted, and we can take a risk with our money to back the founder. And like I said earlier, we have helped over 8,000 tech startups around the world build solid businesses. So it's like a global stamp when you go through the accelerator program successfully. Not every startup that comes in graduates, only those that meet the metrics, and so that is how we are able to de-risk startups that go through our program.
Okay, thank you very much. Yeah, don't let us be. You can always have an idea that is new that you can bring up to, and your idea, you can always develop it with them also. Okay, Turaya, how do you weigh innovation against unit economics or path to profitability in emerging markets like Nigeria? Yeah, that's one. Let me take the second one so that we take it together. Yeah, how do you view exits in the African context? What should startups and investors realistically plan for?
I'll try to answer this in 1 or 2 minutes. I can see that everybody's already tired. Hello, you still awake? Okay, so very quickly, for us, innovation is in 2 ways. Either is a technology edge, which I explained earlier, or it is an adaptable business model edge. So the one that I didn't talk about earlier was the adaptable business model. So fintechs like MoneyPoint, for example, they're not deep tech products, but what they've managed to do is to But yes, so we look at adaptable business models, the ability to create a business model that can grow and scale. So MoneyPoint is a really good example. Chowdeck is even a logistics company, but they've managed to create a business model that could easily grow and scale. So that's what we look out for in innovation, either technology innovation or business model innovation. When it comes to exit, I think that's the next question, right? Okay. Yeah. I think one thing I would say to founders is when you're going to an investor to look for money, think about it this way. Because I see a lot of founders come to look for money, and it sounds to me like they're looking for free money or charity. Mm-hmm. Investors want money more than you want money. That's the first thing to bear in mind. Every investor giving you money wants to make a few multiples on the money they're giving you. It's because they have large institutions that also want to make money more than them, that have given them money, and they expect them to return that money with a lot of ROI on it. So that's the first thing to put in mind as a founder. So if you have a deck or you're going to investors to look for any sort of funding, the first question you need to ask yourself is, how much am I returning to this person? How do I return this money to them? If it's share capital increase, you need to ask yourself genuine questions. Will your company grow to be able to get acquired by a larger entity, either internationally or locally? How do you position yourself from day one as an M&A target? If you plan to IPO on the Nigerian Stock Exchange, which I think is doing incredibly well now in terms of helping startups to IPO, you need to even understand what is the criteria to IPO on the Nigerian Stock Exchange. How long will it take you to be able to IPO on Nigerian Stock Exchange? And those needs to be part of, from day one, the pitch that you make to investors as to how you intend to get them out of that business with profits. If you come to an investor without an exit strategy, clearly they know you do not intend to return their money. So that's on the founder side. On the investor side, I think the market is teaching us a lot of things. A is give instruments where you can easily liquidate and exit. So revenue-based financing, as I mentioned, allow you to get your money back as the company is getting revenue and based on predictable cash flow. Things like equipment leasing allows you to use the equipment as an underlying asset in the investment or as a collateral. So that way you have some securitized investment that you can eventually liquidate and take back some cash. So we really have to be innovative around how we deploy. But we also need to be very realistic and clear around the exit potential of the businesses that we're investing in. The last thing on the investor and founder side both is the valuation. So you're a Nigerian company that knows that, God willing, you can only grow and expand in Nigeria, and you're bringing Silicon Valley valuation. I don't know who you want to invest in that valuation, right? But it shouldn't be a local investor. Don't bring valuation in dollars and tell us precede valuation in San Francisco is this and that. You are not operating in San Francisco. So we really need to be realistic around the valuation that we bring to investors, but also investors need to be realistic around the growth potential of the businesses that they're investing in, as well as the cost of that business. So is it worth the valuation that you're paying for? Would you be able to exit realistically from that business based on the valuation that you paid for? Thank you.
Okay, thank you very much. Okay, I'll take the one question. The 5 minutes that they took the time, we're going to borrow it to heart. Yeah, the SME financing gap, that's a worry. What practical steps can be taken by funders, financial institutions, and government to make SMEs more investment ready and bridge the trust gap between leaders and entrepreneurs?
Okay, so for founders, again, what comes to play is financial discipline. Know your books, you should be able to, at any point in time, have a verifiable business model that is sustainable, that is attractive to investors. That is one way on the founder side. While for financial institutions, they need to move away from the traditional method of assessing companies to being more innovative. We want to move away from collateral-based kind of lending to using other methods of assessing businesses that they'll be able to have access to capital. And then for government institutions as well, I think presently the government is doing a lot in terms of making financing accessible to SMEs. I think more of that is also a way of making these SMEs and startups more investor ready.
Okay, thank you. Yeah, then the last question goes to Choma. Yeah, how do you see technology helping investors verify risk, monitor compliance, and ultimately make faster, more confident investment decisions?
So it boils down to one thing, and that's data. But it's still a bit difficult to bring up an answer to that because regulatory data in Africa, in Nigeria, is still fragmented. So when I say fragmented, it's offline, it's in print. So you can't really collate it to make sense of what it says when maybe a startup comes to you for funding. But I think leveraging data, you should be able to pass through books to understand whether, we've talked about regulatory compliance, whether you're pouring money into a company that tomorrow would go bust because the CBN has imposed a 1 billion fine. You can use data, you can use ChatGPT for those type of analysis right now. You can leverage Steers, for example, that is a data platform for funds, investing money into startups. That's one other way to go about it. But it's such a nuanced conversation. I still don't think technology can solve it completely right now. I think there's still going to be that human element. There has to be a human in the loop. AI can't solve completely those problems because AI wouldn't spot some blind spots that a human would be able to spot. That's one thing. So technology can start the process, but there has to be a human that then fact checks what the technology has done to be sure you're not, okay, so I think you had said something about Silicon Valley. So most of the AI tools we have right now were built there. So the nuances are imported into Nigeria. So if you're using tech for your evaluations, it's giving you Silicon Valley evaluations, for example. So you still then need a human being that is like, oh yeah, this doesn't work. We're in Nigeria, let's be realistic. Yeah, so human beings and of course complementary technology.
Okay, thank you very much. Do we have any questions from within? One? No. 1, 2, 3. Can we take the 3? 1?
Why not?
Okay, 1. 3 male. So how do I share that? The first to raise up hand. Okay, here. Who raise up hand here? Okay.
Olayemi Atako.
Okay.
I beg to stand on all existing protocol. I'm a founder as well, so this is our startup. I'm glad to see Madam FI there because we've been through that institute as well. One of the things, just observation, right? Because we were speaking so much to privacy and compliance. I would have loved if there was like a legal person on the panel as well. Because, oh, you are? Okay. Because maybe that's why it's a lot more apt. Because everything that you said, right, is right there on point. There are things going on about Googling these compliances. Like I was in Algeria for IATF, and somebody goes like, oh, you're doing an online marketplace. Go to SEC, or go to SON. And we went to SON. SON said, we don't have a standard for you yet. We're going to create one because of you. And like, where did that come out from? And then to the issue of valuation, right? Pardon me, I don't mean to be rude, but I think there's a lot of corporate jargons there, right? Because VCs will ask you valuation. You tell them zero, and they're like, you can't be zero. And I go like, oh, $10 million. And they go like, how did you arrive at $10 million? So I think some of these things could be quite discouraging, especially to people that are really just trying to bring things out. So how is it possible to simplify it down to the level of, because with tech now, right, you don't have to be a tech person. You can be a doctor that has found a solution in the healthcare industry, and then you're just using tech to solve it. You can be a market man or market woman that's seen a gap there and then use that to solve it. So how can we simplify these things down to the level of the common person? Thank you.
All right, who's taking that?
I mean, I'm a startup founder, so I could talk from law and startup. Regulations in Nigeria and Africa are still, like I said, it's offline. There's only so much you can leverage technology, to bridge that gap. You still have to then do your work. You're a founder. You can't say my valuation is zero. You've not done your research when you do that. You could, if you don't have your primary data, for example, you could rely on, there's obviously someone else doing what you're doing, for example. If it's a marketplace, you could rely on something else being done in Africa, in maybe Ghana. Then you try to create very realistic assumptions. I'm building in legal tech, and if I describe what I'm building, you probably haven't heard about it. And I can't just go out saying, oh, our valuation, is zero. I have to rely those calculations based on secondary data and back it up, correctly in a way that is realistic. So one way we've done it is for our market sizing. It's like the legal services is a 1 trillion globally, but when I say that to you guys, you'll be like, what do you mean by 1 trillion? So what we've done is, based on our pricing, we've realized that with our strength, without funding, we can capture 50 people in 1 year because it's enterprise SaaS, and we've done that. So when I go to investors, it's like, yes, it's 1 trillion, but in 1 year, I'm starting with this. So you have to do the work, unfortunately. You can't push it to investors. Yeah, you have to do the work, but you also have to then ensure that when it comes to compliance, on one hand, pending when everything is digitized, you're also doing your research. You're getting lawyers to check those things for you. And on the valuation side of things, even if you don't have primary data, then you're doing really thorough research. So what's McKinsey saying? What's the World Bank saying? What's KPMG saying? Then using that to create very realistic numbers that you can defend to your investors. That's
I can just add one single point from an investor point of view. So valuations are negotiable, right? If you have something on paper, it's not just your job to get the right valuation. It is the investor's job to ensure they invest at the right price point. So if you come up with a valuation and an investor is interested in your company, it is their job to actually determine if that valuation reflects the type of business you're building. So come up with something, and it's subject to negotiation.
All right. So at this juncture, we will come to the end of this panel session. On behalf of the organizers, let me appreciate you, the panelists, Ife Adejumo, Ajuma Ataguba, Turaya Ahmed, and Eweredu and Chioma. Thank you very much. I know that we have a lot of things to say. We are so excited, but time always behaves like our enemy. So it has hold us to ransom again today. So thank you very much for this session, and thank you, our listeners, for listening. Thanks.